Alright, listen up. You're here because you're hungry. You're not satisfied with the same old tired names everyone talks about. You want to find that hidden gem, that undiscovered superstar that could supercharge your portfolio. That's the American dream, isn't it? Finding the next big winner before Wall Street wakes up and smells the coffee. It's about doing your homework, rolling up your sleeves, and having the guts to pull the trigger when you see an opportunity. You don't get rich by following the crowd, you get rich by being ahead of it. That's what we're here to do today. We're going on a safari into the jungle of the market to find some new and exciting creatures. People are always asking me, Kramer, where's the next home run? Let's not waste another second. Let's get to work and make some money. First things first, you can't invest in what you don't understand. So let's get a handle on what these companies actually do. Forget the fancy Wall Street jargon. Here's the simple breakdown. Eeiq, Elite Education Group International, helps Chinese students get into colleges abroad. Think of them as a college prep service on steroids. Modv, Inc., single-tenant commercial properties, like a bank branch or a fast food joint. Cgtx, Cognition Therapeutics, a biotech chasing an Alzheimer's cure. NXL, Nexalin Technology makes an electrical device to treat anxiety and depression without drugs. Open Door Technologies buys your house for cash. They cut out the middleman. It's all about speed and convenience. ZNB, Zion Bank Corporation, a regional bank serving the western United States. Fmfc, First M and F Corp, a community bank in Mississippi and Alabama. Inhd, Inno Holdings Inc., building technologies and smart construction. Let's keep the ball rolling. A company's story is one thing, but its stock chart tells you another. It tells you what other investors are thinking and what they are doing with their money. Cgtx, NXL, Thar caps, RLMD. They've seen huge spikes on news about a clinical trial or a new patent, then crushing drops when there's a setback or just radio silence. Over the past year, many have been trending down. It's a classic risk-off environment. Speculative sells first. Open Door has had a rough ride. The stock got hammered as interest rates went up. So what do the big-shot analysts in their fancy suits think about these stocks? Let's tune in. Two Wall Street analysts, one yelling buy and the other yelling sell, at the same stock ticker screen. For the speculative biotech companies like Cgtx Cognition Therapeutics, Hcwb, Hcw Biologics, analyst ratings are often a strong buy, but you have to take that with a giant grain of salt. Why? Because the analyst's entire thesis is based on a single event, a drug getting approved. They'll say, if this Alzheimer's drug works, the stock is worth 10 times what it is today. They are betting on a binary outcome, a complete boom or a total bust. It's a lottery ticket, and the analysts are just telling you how big the jackpot could be. For companies with more predictable businesses, the analysis is different. Take the regional banks, ZNB, Zion, FMFC. Analysts here are more divided. It's a tug of war between value and risk. Okay, let's dive deeper into our first group. So first up is Eeiq, or Elite Education Group, and honestly, they're in a pretty tough spot right now. The whole idea behind the company is to connect Chinese students with foreign universities. Geopolitical tensions and travel restrictions have really thrown a giant monkey wrench into the works. Think of it like owning a fantastic beach resort, but the only road to get there has been closed indefinitely. Next up is Modv, or Modv Inc., a real estate investment trust. Imagine you own the building that houses a CVS or a Taco Bell. That makes Modv a potentially safer, income-generating play. However, the risk here comes from rising interest rates, which can make real estate less attractive. Now let's move to the high-stakes table, Cgtx, or Cognition Therapeutics. They're really swinging for the fences here, trying to cure Alzheimer's. If they succeed, the sky is honestly the limit. It could go 10, 20, 50 times. But the history of Alzheimer's research is, unfortunately, a graveyard of failed drugs. Buying this stock isn't really investing. It's more like speculating. It's like betting on a single horse to win the Kentucky Derby. Finally, NXL, Nexalin Technology. They offer a non-drug therapy for mental health, which is a fascinating area. Great growth potential if they can prove it works and get doctors to adopt it. But the road is long and expensive. It's less binary than Cgtx, but still very speculative. Let's talk about Open Door Technologies. Their idea is brilliant in its simplicity. They give you a cash offer for your home in just days. This cuts out the hassle of showings and waiting for a buyer. But when interest rates shot up, they got stuck holding houses that were suddenly worth less than they paid. That's a recipe for disaster. This stock is risky right now. My advice? Avoid this one until they prove they can make money in a tough market. ZNB, Zion Bank Corporation. They serve Utah, California, Texas. When the economy hums, they do well. Fmfc, First M&F, a hometown bank with deep local roots. Their risk is local economic downturns and loan defaults. Inhd is into smart construction. Great idea, but information is sparse, so risky. Htcr, Hardcore Enterprises, a Japanese SaaS business, profitable and growing, but with currency and competitive risk. Wgrx, Walgreens, not a hidden gem, it pays a big dividend but looks like a value trap. Hcwb, Hcw Biologics, interesting ideas but years away from product, speculator only. For most investors, there are better, safer places to put your money than a struggling giant with no clear path to growth. Let's move on to the most speculative corner. Kicking off this section is Opad, or Opiant Pharmaceuticals. They have a product that is tragically necessary, a nasal spray to reverse opioid overdoses. From an investment standpoint, they have a successful revenue-generating product. The big question is what's next, their pipeline for other addiction treatments. It's a competitive field, but having a revenue product is a big plus. Next, the mystery box, OSRH, Osiris Acquisition Corp., a SPAC. You are giving your money to a management team and betting they find a great private company to buy. For a beginner or intermediate investor, SPACs are generally a no-go zone. Htcr, Hardcore, SaaS with recurring revenue, intriguing for international exposure. Gmhs, another clinical stage therapy company. Duolingo, a consumer tech winner, noted here as a contrast to many speculative names. Movano, building a smart ring. They've seen their stock languish while burning cash. The chart is a slow bleed, a red flag that investors are losing faith. This section is heavy on companies that are speculative but grounded in real products or interesting tech. Still, proceed with caution. Welcome to the high-risk, high-reward corner of the market. These are the lottery tickets. Thar, a clinical stage biotech focused on liver diseases. Its value is tied entirely to the hope of successful trials. CAPS, Capricor Therapeutics, working on Duchenne and heart conditions. Orphan drugs may get faster tracks, but the risk remains immense. These companies burn through cash and often fund research by selling stock, diluting you. If a lead candidate fails in phase 3, a stock can lose 80% in a day. This is not for the faint of heart, a resounding no for most investors. Ipdn, Professional Diversity Network, a feel-good social impact business that struggles to compete with giants. Move wants to compete with Apple and Oura, like a high school basketball team versus the Warriors. You need billions for marketing and R&D to win in wearables. Nukk, in the crypto space, the Wild West of finance with extreme volatility. Vivs, Inc., serves as a ghost of Christmas future. Bankruptcy can wipe shareholders out. This is what can happen when you bet on speculative names. These plays belong to professional biotech speculators or deep-pocketed venture investors, not most retail accounts. If you can't afford a total loss, stay out. These are lottery tickets, not core holdings. Alright, we've been through the jungle, and we've seen the beasts big and small. Now it's time to make some sense of it all. Beginner zone. Regional banks like ZNB and FMFC, real businesses tied to the US economy. Not get rich quick, but unlikely to go to zero. Htcr, a profitable, growing software company, a reasonable look for investors wanting growth with modest risk. These are your safest bets in a wild bunch. Now let's talk about the danger zone. Pre-revenue, clinical stage biotech companies, Cgtx, NXL, Thar, CAPS, Hcwb, RLMD, Ifrx, are not investments, they are speculations on experiments. The odds are overwhelmingly against you. Also, in the danger zone, open door, the business model is under severe stress. The SPACs, OSRH, NXTT, blind bets. I wouldn't recommend them. Microcap dreamers like Move and Ipdn, stay away unless you really understand the risks. Investing isn't a game. Know the rules. The stocks we talked about today live in the riskiest corners of the market. Before buying speculative names, build a foundation of high-quality, profitable blue-chip companies. These speculative plays should only ever be a tiny fraction of your portfolio. Money you can truly afford to lose. Always do your own research. Read the reports, listen to the calls, be smart, be patient, and have the courage of your convictions. Now go do your homework.